Hello, my name is Steve Bigelow with the Candlestick Forum. Market trend analysis is greatly simplified when you're using candlesticks. For example, we knew the breakdown of the Dow because it came out of the bottom of the wedge formation, and it did it with great enthusiasm. Today, we had a move back up. It traded lower and has done a long-legged doji. Now, this might imply that there's some support level here, and we would suspect maybe a bounce back up to the bottom of this channel, which would also kind of correspond with where the T line was. So it wouldn't be surprising to see a bounce up into this area, but that does not change the downtrend yet because you're still trading well below the T line. Same scenario over here on the NASDAQ. Did kind of a hammer signal, almost bouncing off the 200-day moving average, with stochastics not quite in the oversold area. So that leaves you a little bit of suspicion that this was just kind of a bounce day. Tomorrow, the T line will be down here, so maybe it will open positive, but it still needs to get through the T line to tell us this downtrend is over, which right now we wouldn't suspect just yet because of the magnitude of the selling signals. Same thing on the S&P 500, where they bounced off the 50 today, did a hammer type signal. Very simple strategy. The Doji hammer type move, but not in the oversold area, still reflects the possibility that if they open up positive, they might come up to the T line, test it, or if they open it lower, obviously the downtrend is still in progress. Now, this gives us a lot more benefit of seeing what to do with trades, such as Shopify that had the bearish kicker type signal, but it did a hammer signal, Doji, sitting right here on the 50 in the oversold area. If this opens positive tomorrow, we would cover short positions. However, there was other charts like Google that is in the bearish J-hook pattern, not showing any bullish sentiment yet. So these would be more likely where you would hang on to them until you see a reversal signal. Same things with Neti or Net, where the bearish kicker signal took you down through the T line. Today they came up and used the T line as a resistance level and traded lower. Ring, same scenario. Once it went through the 50, until you see a buy signal, you can stay short on this position, where it would be a logical short based upon going into the oversold area. Shouldn't come back up through today's open. So we can see which direction each stock or sector might be moving. The shipping stocks showed good strength today. As we can see in Nordic, there was your fry pan bottom, double bottom, fry pan bottom breakout, J-hook pattern. Tells us that wave 1 and wave 3 are likely to be the same. Where do we get confirmation or additional confirmation? If other stocks in the sector are doing the same thing. Notice how Starbuck did a bullish flutter type kicker signal, broke out through this resistance level, a bobble breakout. When they did, what was everybody else watching? Well, first of all, we could see there was a strong bullish signal telling us the bulls are taking control. Secondly, everybody else was watching the resistance level. That's when they come piling in. So that's why our recommendation today on IMMR was based upon if it opened positive after this gap up doji, a bullish flutter kicker signal setup, that it opened positive, you could start trading at positive, because this right here was the alert that there was bullish strength coming in. Now you can see that it broke out through this area. As a day trader or a swing trader, you could still be buying on positive trading, again, confirming the buy signal, the bullish flutter kicker signal, and everybody else seeing that it's closed above the 50, they start piling in. So all this is just very simple logic of what the candlestick signals tell us and what the results are likely to be based upon where the trading is occurring and the strength of the signal. So we still always put out our free offer of 2 weeks to come and try the logic of candlestick signals, because no matter what you overlay, or let's say it this way, if you overlay your candlesticks on your charts, no matter what trading strategy you're using, you're going to be able to see how it moves much better. And then join us tonight. Every Thursday night, we have a free chat room training on our website. The link will be in the text area. So come join us. Basically, it's just showing what the logic is that you're putting yourself in high probability trades. That'll be it. We'll see you in the chat rooms.